$6.3 billion moved on-chain this week as Bitcoin whales staged a relentless accumulation campaign despite the price collapsing 6.75% from 64,000 to 60,000. This wasn't panic selling, this was institutional shopping during a fire sale. Monday started calm enough. Bitcoin actually closed up 1% while whales quietly added 1,483 BTC to exchanges, a measured move that set the tone for what would become an explosive week of on-chain activity. Tuesday flipped the script. Price dropped 3.2% and whale activity exploded 84% above the weekly average. That's the moment you knew something was shifting beneath the surface. Wednesday got worse, another 4.1% decline, but here's the critical detail. Whale volume surged 54% above the week-long average again. The Fear and Greed index was screaming extreme fear, but these weren't retail panic sellers. These were sophisticated players with enormous capital moving Bitcoin methodically and deliberately. Thursday was the dramatic peak. Bitcoin slipped down to $59,200 and whales posted a staggering 7,051 BTC net inflow into exchanges. That single day represented nearly $1 billion in whale volume alone. And then the week hit its most striking moment. Friday saw the biggest single transaction of the entire week. 5,081 Bitcoin moved wallet to wallet, worth $300 million, likely representing a major position reallocation or institutional accumulation between private wallets. Friday itself was fascinating because even as inflows continued hitting 24-hour highs, Bitcoin held relatively steady around 59,800, suggesting the market was absorbing this massive whale activity without cascading lower. Then Saturday delivered a subtle signal. 607 BTC exited exchanges. After days of constant inflows, we saw the first outflow, which typically suggests some whales were locking in positions or moving Bitcoin into cold storage after their shopping spree. Let's zoom out and talk pattern here. 28,798 BTC flowed into exchanges net for the week. That's positive for potential selling pressure, but the structure matters more than the number. We saw 14,549 individual whale transactions and 721 mega whale moves of 1,000 plus BTC each. This wasn't disorganized movement. This looked like coordinated accumulation during weakness. Fear and Greed averaged 16.7, which is full-blown panic territory, yet whale behavior was clinical and measured. That's typically a bullish divergence. When smart money is buying during maximum fear, history suggests they know something the broader market hasn't priced in yet. The outlier here is the sheer velocity of exchange inflows concentrated into Tuesday, Wednesday, and Thursday. That's not typical behavior even in bearish weeks. It suggests either preparation for a major move or genuine supply accumulation ahead of anticipated volatility. Watch next week for whether these whales continue their inflows or start the exit phase. That's your leading indicator. Daily briefs go live every day at 9 p.m. UTC on SwissWhaleIntelligence.com. Subscribe and turn on notifications so you don't miss tomorrow's update.